Hello class and welcome to our second lecture series on Principles of Accounting or Financial Accounting, and I'm your instructor Jamil Haider. Okay, so we are starting this is our today's lecture and regarding a review that we have discussed. So those who couldn't join in our first lecture, so this is just for review that we have designed this course as 10% attendance. Attendance include both not all quizzes, question and answers, and behavior in the class. Remember, the quiz session is a little bit optional and it's on me. If I found that you are not showing your engagement, then I would be encouraging your engagement through quizzes, and quizzes do have marks if you don't see your engagement. Okay, and question and answer is going to be giving you a participation marks, so total 10% of your overall exam policy, 30% assignment, 30% midterm, and 30% final. And then we talked about the misconduct in class, so I'm not going to repeat that. Okay, so then we talk about our first chapter, financial statements, and we ended our lecture on accounting equation. And what we talk about on accounting equation, assets is equal to liabilities plus honors equity, right? What we have learned here, assets is equal to liabilities plus honors equity. So can anyone tell me what is asset?
Economic resources and expected future benefits.
Well done. But resources, which kind of resources? You must add word economic.
Economic resources. Yes, I said.
Can be free or can be acquired, right? So in real world, we do have what we call as scarcity or limitations. We cannot have unlimited resources, okay? So all those resources that have of economic nature or monetary value, we do call them assets. And so what are the definition of assets? All those economic resources that a company have under its ownership. We call this assets. What are the liabilities?
Outsider claims and expected future sacrifice.
Well done. Monetary payments or monetary claims of outsiders or those who are providing loans either short-term or either long-term to the company, they are called liability holders or there's liability. What are the honors equity? Insiders claim, right? What do we mean by honors equity? So you can also focus on the word honors equity. You can say that it is honors claim on the business, right? Okay, so before going into our before going to start our this lecture, let's have our attendance. So I'm going to stop the video here and we are going to do attendance, and then we jump to that slide where we ended in our last lecture. Okay, welcome back. We were having attendance. So we ended our discussion in our last class here, and in which we talk about honors equity, and we talked about how we can calculate the honors equity. And honors equity has two parts, right? We discussed honors equity had two parts: paid in capital and retained earnings, right? And then we talked about what are the retained earnings. Retained earnings are all those earnings that belong to owners we kept inside the company, we didn't distribute. So we retain in the company. So is this a liability or honors equity? Of course, this belongs to owners. So that's why we categorize it under honors equity, right? And how we can calculate the total retained earning from previous years. So beginning retained earning plus this year earning or net income minus the dividend this year what we have distributed to owners, whether we have distributed or not, it can be zero or can be something. So that would be our ending balance. And how we can find out the net income? Simple. revenue minus expenses. That's it, right? So we have ended our discussion here in our last lecture. So let's begin from here. So now the real deals gonna start here. So we have illustration here. Blue Diamond Corporation has current assets of 360 million. Property, plant, and equipment of 600 million. And other assets totaling 220 million. Current liabilities are 210 million and long-term liabilities are 560 million. So what is the accounting equation? Assets is equal to liabilities plus owner's equity, right? So number one requirement, use these data to write Blue Diamond Corporation's accounting equation. Number two, how much in resources does Blue Diamond Corporation have to work with? So number one, let's solve this number one. So we know that assets is equal to liabilities plus owner's equity. So how much are the assets? Current assets. We are not just going into the definition of what is current and what is, the long-term asset. We will talk about in coming slides. But these are assets. Assets 360 million. Assets 600 million. Okay, property, plant, equipment, of course, these are assets under business possession, under business ownership. Current liabilities, sorry, other assets, we do have other assets, 220 million, so we add it up. So our total assets gonna be $1,180 million. So other side of the equation, right hand side, 210 our liabilities, 560 is our long-term liabilities, and is this a total amount? Does our equation balance? No. It means the difference is going to be owner's equity. How much is the owner's equity? 410. Right? Now, second requirement is how much in resources does Blue Diamond Corporation have to work with? So what are the resources? So this is the resources for the company or for the owners? Company, right? So how much are the resources? Sorry. How much are the resources? Total assets, right? Second, how much does the Blue Diamonds? Remember, Blue Diamond is our company, not owner's name, company name. Owe to the creditors, which means how much is the outsider claim? Total 770 million. And our requirement, next requirement is how much of the company's assets do the stockholders actually own, or how much is the insider's claim? 410. So you can also use different methods or different definitions here. So let me just give you a different flavor here. Okay, how much is the value of the company? $1,180 million, right? How much is invested by the owners? 410. How much is invested by the other people other than owner or outsiders? Simple. 7. So you can also think in different ways to see this equation. You can also balance it out. If you want to find out, like we did through balancing figure, we found out the stockholders' equity. So you can also, through balancing situation, you can also find out the liabilities as well. So right, you can just do not extrapolation. You can do just different equation methods, right hand side, left hand side, right? You can just find out. Okay, so I'm gonna be setting up the breakout room, and I want these answers from you. So now everybody knows that assets is equal to liabilities plus owner's equity. So you just need to find out these answers of these requirements. So you can take a picture. Let me refresh here. Erase all ink here. So please take a picture. Meanwhile, I am setting up the breakout room activity. So those who are watching online, so for them, I'm just stopping the video here, and then I will be resuming once we're done with this breakout room activity. Okay, class, welcome back after the breakout room activity. So I have received your class or group activity. So let's discuss the answer. You can see one by one here. So if the assets of a business are 360,000 and the liabilities are 120,000, how much is the owner's equity? 240,000, right? Second one, if the owner's equity in the business is 180,000 and the liabilities are 100,000, how much are the assets? You can just add them, it's 280,000. 3, a company's reported monthly revenues of 325,000 and expenses 85,000. What is the result of operations for the month? Simple. You need to find out net income. Revenue minus expenses. It's 240,000. Number 4, if the beginning balance of retained earning is 150,000, see, beginning balance, which means previously on previous years, this much income, accumulated income, are not being distributed to the owners, rather retained by the business. Okay, this year what happened? Your sales are revenue is 75,000, expenses are 35,000, and company paid among the net profit 10,000 as dividend. So how much is the ending balance of retained earnings? Simple. Beginning retained earning plus net income minus dividend is equal to ending retained earning. Simple. So here is the answer. 180,000. Beginning 150,000. Net income is how we can calculate revenue minus expenses, which is 40,000. So among this 40,000, how much we already distributed to the owners? Only 10,000. How much we did not distribute? 30,000. Added to the beginning balance, which is 180,000. So clear? Well done, guys. Okay, now our fourth learning objective is evaluate business operations through financial statements. So let's just talk about it. Okay, so question, how well did the company perform during the year? We can find out through income statement. So just giving you the idea here, we have 4 financial statements. Number 1, income statement. Number 2, balance sheet. Number 3, okay, income statement. Number 2, retained earnings. Number 3, balance sheet. Number 4, cash flow statement. So these all 4 statements gonna tell you different aspects of the business. So number 1 aspect, how did company perform during the year? We can find out through income statement. And what is the income statement formula? Revenue minus expenses, that's it. How did the company's retained earning changes during the year? You can find out through